$87,000 by 2025. Sounds unreal, right? But this prediction is not just a wild guess. It's grounded in market fundamentals, technical analysis, and some massive institutional accumulation happening behind the scenes. Yes, we're talking about BlackRock and other financial giants that are betting big on Bitcoin. So, what's really going on? Let's dive in. The Power Law Corridor first. Let's talk about the Power Law Corridor, a long-term technical model that predicts Bitcoin's growth over time. Historically, Bitcoin has followed this path, and we're currently sitting in the lower range of this corridor. If we break upward, analysts believe we could hit $87,000 by 2025. But technical analysis isn't the only reason for the optimism. There's something bigger brewing in the background, something that's caught the attention of financial giants like BlackRock and institutional accumulation. Let's talk about the big guns, BlackRock. The world's largest asset manager is quietly but consistently building its Bitcoin reserves. BlackRock recently filed for a Bitcoin ETF, signaling that they're in it for the long haul. An ETF approval could open the floodgates to billions of dollars from retail and institutional investors alike. And it's not just BlackRock. Fidelity, ARK Invest, and other financial heavyweights are doing the same. These firms see Bitcoin as a hedge against inflation and traditional market volatility. They're playing the long game, and they're stacking up on Bitcoin as part of their portfolios, global adoption, and macroeconomic factors. And it's not just institutional players. Global adoption is ramping up. Countries like El Salvador have adopted Bitcoin as legal tender, and we're seeing more businesses, from retail giants to payment processors, accept Bitcoin as a form of payment. The world is becoming more Bitcoin-friendly, and that's creating demand on a massive scale. With rising inflation and fears of economic instability, many investors are turning to Bitcoin as a store of value, much like gold. This shift is fueling even more demand, pushing Bitcoin's price higher. Short-term resistance levels and key targets. But before we get too excited, let's focus on the immediate price action. Right now, Bitcoin is facing a key resistance around $59,600. Breaking through this level could spark a rally that pushes Bitcoin to new heights, 65K, 70K, and eventually toward that 87Ks. Technical indicators like the RSI and MACD are showing signs of bullish momentum. But remember, Bitcoin is highly volatile, and nothing is guaranteed. Institutional backing, a long-term play. So why are these big institutions betting on Bitcoin? It's not just about short-term profits. BlackRock, Fidelity, and others see Bitcoin as a long-term play. These firms manage trillions of dollars in assets, and they're not looking for quick gains. They're betting that Bitcoin will continue to rise as a store of value over the next decade. In fact, whale accumulation is a key signal here. Large investors, both institutions and high-net-worth individuals, are steadily buying up Bitcoin. Over the past year, the number of wallets holding significant amounts of BTC has grown by 5%. This shows that the big players are preparing for something big. Potential setbacks and risks. Of course, it's not all smooth sailing. Regulation remains a big question mark. Governments around the world are still trying to figure out how to handle Bitcoin, and any sudden regulatory crackdowns could shake the market. And let's not forget about Bitcoin's infamous volatility. Even with all this institutional backing, a sudden news event or market correction could lead to sharp price drops. Risk management is key. So, can Bitcoin really hit $87,000 by 2025? The pieces are falling into place between institutional accumulation, global adoption, and favorable macroeconomic factors. It's not just a possibility, it's becoming more likely by the day. The big question is, are you ready for the ride? Will Bitcoin hit 87K, or are there more twists ahead? Drop your thoughts in the comments, and don't forget to subscribe for more updates.